Hey, what's up, everybody? So we're gonna give it a second, let some people get on here. What's up, Andy? Thanks for hopping on, man. And so you can ask any questions if there's anything you want to see in the chat box, or ask a question in the chat box, and I'll go over those pairs. What I'm really wanting to focus on is the dollar, because we got quite the rebound on the dollar last Thursday and Friday. We saw a lot of dollar strength come in the market, and we could be at a bit of a turnaround point. So that being said, we have a few pairs to go over that's like super important when you're looking at the dollar. And the dollar index, definitely USDJPY, my personal favorite, and the dollar Swiss is a good indicator for dollar strength. And then, of course, EURUSD. So I shared some of those charts in our VIP group, but I'm going to go over them here live. Also, the pound dollar is at a big conjunction, and so is the Aussie dollar. So what I'm saying here is why I wanted to focus on the dollar. Really, that's like my main currency to look at. For me, it really helps if you're just like, okay, I'm going to focus on dollar pairs, or I'm going to focus on yen pairs, or euro pairs. Especially if you're in the UK, a lot of people that are in the group are in England or Ireland, or so. If you're over there in Europe or Portugal, if you're over there in Europe, it's better to focus on European pairs, especially if you're just trading during that London session. So I'm trading all of them, but mostly New York session. So I'm focused on dollar yen, euro USD, dollar CAD, and so we have some big stuff coming out for the dollar. And the S&P 500 is at such a turning point. It's crazy. What's up, Sean? Boy, Connor crushed it last night, huh? So yeah, that was fun. Anybody watch the UFC fight? And we got the AFC Championship here in the U.S. So my team, the Titans, are in it. I'm here in Nashville. So that being said, let me pull up my charts. Like I said, if you have any questions, hit me up in the chat box, and I'll go over those pairs too, or at the end. So first of all, when I'm looking at, I didn't start doing this until later. I didn't realize how, when I first started out, because I knew it was important to make a game plan for the week, but I would always forget. I would start looking at charts, and I would forget to look at, let's see here. Let me share my screen. I would forget to look at the calendar, right? So, because the most important thing, what moves the market, is all the data that's going on over here. So it's going to be a really quiet week this week. We have some monetary policy statement out of Japan, which typically you can expect the Japanese central bank to be dovish and weak, and not looking to hike interest rates. That's for sure. But one of the things I was just looking at it, that's going to be a super big market mover, I think, is this Canadian CPI data. So and that's on Wednesday, and then later that day on Wednesday we have a monetary policy report out of Canada. And for the past month, really, Canada has had some super bad data, and so I'm expecting them to be pretty dovish. And what I mean by dovish is not in favor of strengthening their currency or strengthening their monetary policy position by raising interest rates or doing anything like that. So this is going to be a big day for CAD, and especially US dollar CAD, because we're at a pretty big turning point there as well. So I'll pull that chart up. Thursday for the euro monetary policy, and this is going to be big because we have Christine Lagarde, who's the new European Central Bank head, and so it's going to be interesting to see what her stance is. Plus, Euro USD is at this major support level, So I'm going to look at that one. That we're at 1.1080 on Euro USD, and that's a major level. And then so Thursday, CPI out of New Zealand, and Friday, pounds data, but we don't have any dollar data. So that's the thing. And you know, I don't really see much. If we're getting some dollar strength coming in the picture, like at the end of last week, like we did, there's not really any, there's no NFP, there's no, you know, retail sales was the things that really strengthened the dollar. We don't have anything that's going to weaken it coming into the picture. So let's take a look here. So I have US dollar Japanese yen pulled up, but first of all, I want to pull up the dollar index. And I did a free webinar for the not the VIP, the free group, and I went over the dollar index and this structure right here, and I talked about false breakdowns, how they lead to a breakout, and look what we have here on the dollar index. And so this is a big deal because it really looks like the dollar was breaking down. You know, we have this inverted head and shoulder pattern here, and it really kind of fell off. Right here, right, you can easily see this triangle pattern that we formed and a breakdown, right? So, but the breakdown didn't last and we got back inside this trend line. And so when you see something like that, that really means that, well, this is a fake out and now we're going to push the other way. And also you could be looking at this and be like, oh yeah, and that's the inverted head and shoulders there, right? So that's straight up inverted head and shoulders. When you're drawing your inverted head and shoulders or trading this, something that I like to do that really confirms this pattern and that it's going to continue to be a bullish pattern is I like to you know, do a trend line through the middle of it. Sometimes at the top up here is a little more accurate. And you can see, you know, we have our inverted head and shoulder pattern here. We've broken out. We've yet to retest this little breakout here. So I wouldn't be surprised maybe to see a little bit of dollar weakness to retest that trend line and then followed by dollar strength. And if that happens, man, our upside targets are up here. So we'd be looking at 98.15 level, and so I'm going by these fractal points up here, 98.30, and so that's a lot of room for the dollar index. So if we're talking about the dollar index, again, if you have any questions, hit me up in the chat box. If we're talking about the dollar index, we have to talk about Euro USD. If Trump gets impeached, could that weaken the dollar? Yeah, that's definitely going. That's definitely going to. I don't know about the dollar, but what's going to happen with that? That's a good question. Is that we will definitely see the S&P 500. First of all, Trump's already been impeached, so he was already impeached by the House of Representatives, and then they moved that to the Senate, which now they're having a trial to see if he is guilty enough to be removed from office, essentially. So he's already been impeached, and you know the market, it didn't even face the markets. Now, if he gets removed from office, then yeah, we're going to see the S&P 500 just like we're going to see a big reversal, a massive reversal, and this is frightening how bullish this is, honestly. And if you go to a weekly chart, look at this divergence here, right? So you can see the RSI's pointing down on a weekly chart, extreme overbought conditions. So this is it's a ticking time bomb. So if Trump got removed from office, then yeah, this thing is going to correct like nobody's business, man, for sure. So what impact that would have on the dollar? That might strengthen the dollar because the dollar is a safe haven investment currency because it's the dollar. Everybody uses it on planet Earth. So how much would it weaken? I don't know. you know, really this whole stock market bullishness is what's created a weaker dollar. But that's a good question, man, for sure. That's definitely, it's like a perfect storm of things that could happen right now that will make the market turn upside down. So to get back to the dollar index, just to get you guys looking at it, here's our kind of bird's eye view of it on a weekly chart. And, you know, we would be targeting this upper level. So if we're looking at the dollar index, then we have to look at its inverse, which is EURUSD. So with EURUSD here, this is a weekly chart. You can see that we broke out and we're starting to break back in. And so this, if we have a false breakdown on the dollar index, then more than likely we're going to have a false breakout on EURUSD. You know, I really hope that's not the case. I was really wanting to see a rally up here to these like upper levels over the course of these next few months. But the thing is, if we break this 110.80 level in the EURUSD here, and so you can see head and shoulders, right? And then we just kind of range fizzle out here at the bottom. We have quite a bit of reversal going on here, but we haven't been able to break out. And so that's the thing. If we're unable to break out here, it can only make so many tries to break out. And so if this breaks down and we're at this level right now, 110.80, we break this 110.80 level, that's going to be a big deal, man. It's going to be huge for the dollar, and then you can really expect dollar strength to just rip across the board, and that's a big possibility this week. I mean, the other side of that coin is if we get back inside, man, you know, and then the rally continues, and then that would kind of confirm that we've broken out here for EURUSD. So next, I'd like to look at the pound, right? So we're keeping in mind that we've established, oh man, the dollar index, and this is how I approach the charts on when I do these weekly charting, and when you do them at home. I think it would be good for you guys to go about it this way: is establish a bias, right? So that's one, you establish a bias. Two, you accumulate the reasons why you have that bias. So for us, it's the false breakdown on the dollar index. Now that could be the clue, because we're just looking for clues here. We're just putting the puzzle pieces of the market together so we can make the right bet, is essentially what trading is, you know. And so we've come to the conclusion that, hey, false breakdown on the dollar index, we could be at a false breakout on the EURUSD, and now we go over here to GBPUSD. So now we're looking at other dollar pairs, and look, this looks like a false breakout as well, right? We have, when you see a huge wick, like a breakout and a huge wick here like that, and then a reversal the other way, that looks like a breakdown. That looks like it's a fake out, right? Or a stop hunt, or whatever you'd want to call it. You know, and so we're in this triangle formation here. Now the thing is, if we can bounce back out of here and resume to the upside, that would be great, because then you can really expect the pound to just crush higher. But if we get this incoming dollar strength and we break down, and especially this is the level you want to watch on the pound dollar, and you can go back and watch this again. Draw this trend line. I've shared this chart with the VIP group, so they have it. It's one of the perks of being in there. You know, draw this trend line, and if you see we break down below that, that's going to be super, super bearish for GBPUSD, and then it's going to be time to really, you know, put in some shorts here. I think with targeting 127.50, and let's see where that matches up with our Fibonacci. And that comes in pretty close to the 61.8 level. And 61.8, the golden ratio is what they call it. So very important Fibonacci level for sure. and something you should always look for when you're setting your fib charts. So, you know, we're at a crossroad here on GBPUSD. And so now you can see how these puzzle pieces are starting to fit together, hopefully. Now we go to the dollar Swiss. And so we got stopped out last week trying to buy a little bit too early, and then we re-entered down here, and we got a great bounce off of the support. You can see this nice hammer candle right there, right? So that's a sign of a reversal. And if we go to a 4 hour, this looks like a potential double bottom, right? 1, 2, or at least 2 bounces and divergent RSI to the upside, bullish divergence. So dollar Swiss looks like potentially, especially if we get all this dollar strength coming in, that this is going to be an excellent sign for potential reversal trade. And so a couple more with the dollar. So now hopefully I'm painting a picture that's now you can see where the dollar's at and that we're at this crossroad. So US dollar, Japanese yen. All right, so we broke out of this lower kind of trend line, right, on this daily chart. And if you go all the way back here to, like, you can go back to a weekly chart. This makes just huge triangle. And so we've broken one layer of resistance, and we're trying to break the other one. So 110.20 is a big level for the dollar yen. And, you know, if you're wanting to do some sort of, like, if you wanted to fade this move, this wouldn't be a bad time potentially to sell US dollar yen. But the thing is, with the stock market so high, and if it just keeps moving higher, then that's going to be extremely weak for the yen. And remember, we have that Japanese central bank coming out too on Monday. So which probably will weaken the yen further. So that might be the fuel to get this to break out even like higher. We get a breakout above 110.20, then that's going to be, you know, even stronger for this dollar case. The other side of this, if the opposite of these things happen, then you can really expect the dollar to break down. And so, you know, when I'm looking at all these dollar pairs this week, that's what I see more than anything. So if we're looking at dollar yen, next we want to look at gold, because those two are so strongly correlated. And gold's really trying to make this recovery here from this huge breakout from the whole Iran deal. You know, we have, this looks like a big reversal candle here. So the question is, can we rally higher? I think a lot of the people that I follow are on Twitter and stuff like that are calling for one last push upwards here to this kind of 1573 level, which happens to be the 50% retracement of 50% retracement of that breakout to the breakdown here. And this is going by kind of an Elliott wave count of, and then moving lower, which that could very well happen. Or, you know, or the gold's been so bullish, or it just turns around and just like rips faces off higher, which is definitely a possibility. The thing is, this 1588 level is, so remember I talked about the 61.8 retracement. It's the 61.8 retracement of the all-time high to this low of this huge pattern that we were trading in. So for us to break out of that is going to have to take some sort of big event, like the S&P 500 turning around would definitely qualify for that for sure. So yeah, 1598. On the daily chart, I had it coming in a little bit lower, but it really doesn't matter. So I think there's two scenarios here, and one is that we retest the 61.8, or that we go to this 1570-ish level, 1575, and then move lower and really get kind of a reset here before we move higher again. And really, because overall long term, definitely looking for gold to go higher because we've broken out so much, but a nice healthy correction would be great. And there seems to be a lot of dollar strength coming in right now that would be the catalyst to make this happen at this time before we go higher. So if we see the dollar yen breaking out and US dollar Japanese yen starts heading to 110.50, then you can really expect gold to drop. On the other side of that, you know, if the dollar yen breaks down and gets back below 109.50, then gold is going to be ripping higher because they're so inversely correlated. And this is like the way I trade. I look at all the pieces. Like I said, it's a puzzle, and trying to put the puzzle together to get the right analysis, because too many people out there, you just look at one chart and look at one chart, don't think how they're all related. But it's the market is one big giant a flow chart, right? Where it goes from one thing to the next, to the next, to the next. And so the money's going out of gold and into the dollar and out of the dollar and then into yen and then into the stock market. And then the stock market turns around and then back into gold. And so everything's connected. And when I started to put the pictures together like that, the pieces, it started to make way more sense for me, for sure. So I think a healthy correction on gold here would be great. You can see though, we have like on Friday broke out of this, like, let's see here, broke out of this like resistance level and broke above it. But at the same time, we didn't take out these former highs here, which would have been important to make a higher high. So, maybe we're at this resistance now and it struggles to move further. So, the market opens in a few hours, we'll see. And so, yeah, that's what I'm looking at on the dollar. And I think there, since we have all that Canadian data come out, I think it's going to be important. I think the Canadian dollar is going to be something to pay attention to this week, big time. So this is the CAD yen. Which is broken above some resistance here. If the yen continues to be weak, this could be a very good breakout trade. And let's look at the dollar CAD. And so with this is at an interesting point as well, because we're right at this trend line here, right? We bounced off, but we're below this level of support. Okay, so you can see how we've been trapped in this little range here. So if the dollar gains strength and then this rip and this breaks out higher, plus we get like some super negative statements from the Canadian bank on Wednesday, I guess that was, then you can really expect this to move higher. But of course, Canada has such a strong correlation with oil that really comes into play too. And we look at like we're at a big recovery point on oil as well. So this is what I'm looking at. All my charts got erased. Whenever you like charge your phone or iPad or whatever, I like the iPad because of how fluid it is. I also use TradingView as well, but sometimes the charts get erased, which is super annoying. So this was the whole Iranian deal. Huge sell-off here. And now we're looking to make a bit of a recovery. So you can see we have a nice X marks the spot. This is one of my trades. I definitely teach in the training in the academy, and you know, we're just held up by this layer of support here. So you know, when I look at this and establish that, now I'll put my Fibonacci's down here, and now I have targets, right? So first I would be looking for this 38.2 level, and that really could make a good selling opportunity. 50% is at 61.60, but it looks like we're about to get a bounce here, and so that would strengthen the Canadian dollar, and that would if that happens, then you would definitely want to be looking to buy the Canadian dollar yen. So that's it. Does anybody have any questions? That's kind of what I'm thinking about for the week, you know, and so it's going to be a good week, man. Thanks for the webinar and everything else you've been doing for free lately. Appreciate it. Yeah, man, no problem. And yeah, appreciate you guys. So, you know, there's way more content and a lot more juicy details. And if you want to learn how to do this for real, the Training Academy is the place to do it for sure. And that's where I'm at all day long, you know, and people that are in there have been with me for a long time, years now, and they changed their lives trading. So it's awesome, man. We have a good time. And yeah, so let's crush it this week. Thanks for hopping on. I appreciate y'all, and I'll see you in the VIP chat room, hopefully. All right, everybody. Peace.